I'm going to make a little weekly recap video for the first week of April here. Pretty solid week, most consistent week I've had in a while. Let's see. Just over 9K. Really good week. My consistency has been really on point. I think primarily due to the fact that I'm just staying in my lane, sticking to my own thoughts. I haven't been on social media. I haven't been in chat rooms. I don't really know what people are saying or thinking per se. I'm just going with what I see. So I'm just going to go over some of the main trades that I think are important to go over this week. Some of the good ones, some of the bad ones, but really there were no really bad losses this week, which is maybe first time that's happened in a while. Like I said, consistency's been pretty on point. I think it comes down to this column right here. This emotional level is very, very solid recently. I find the better my emotions are, the more, I wouldn't say profitable my trade. No, yeah, the more profitable my trading is, the better my emotions are. I'm able to stick to my discipline, stick to my process, stick to my patterns, and do the things that matter. There's no bullshit, no ego involved, no, negative emotions. I'm staying positive, and good things happen if you just do what you're supposed to, focus on the process. So on that note, I will go over just some of the trades of the week, my thoughts going forward, and yeah, that's that. So just getting into it on April 1st, Fannie Mae I want to go over. Now, it doesn't really look like much on this chart right here, this green day, but just to give a little background, so Fannie Mae, this is just a beautiful, beautiful multi-month OTC runner off the lows from 70 cents all the way up to 2. Not super volatile, not crazy, but it's Fannie Mae. It's not going to move the way it did maybe back in maybe 10 years ago, but basically was a great runner. Had a nice, secondary breakout here. Then we had the $2 share failed breakout and a big, big volatile pull. Look at the range on this candle versus all prior price action. The only similar day, I guess, was here on the initial run, but I think this is more important because we just had a massive multi-month run. Well, not massive, but good multi-month run. So there's a lot more power behind the move, I would call it. I mean, a lot more dollar volume, as we could see. So I was definitely interested for at least a short-term bounce play. So let me just hold on, let me go into the on-demand feature here so we can just get the correct date. So it would be April 1st. So basically the whole idea was look for a bounce opportunity, and that's exactly what we got. But I classically got faked out. I was buying in the morning on the dip here, got a beautiful average of 153, oversized by accident to like 30,000 shares. Whoops. And immediately I scaled down a little bit because I didn't want to take that much size with this much volume. It wasn't a good enough pattern anyways. It was just a very short-term, small idea that had to work exactly the way I was thinking. And what I was thinking was we were going to go green, hold green, keep pushing. What happened was we went green, we came down. I thought, oh, this is it. We're cracking 150. We're going to have that big panic and I could add. Of course, though, it held, reclaimed. I was still able to lock into the game, but, by the end of the day, if we go to the end of the day, it ended up having a really, not much further of a bounce, but with the size I had, it could have been a good bounce, and that's it. I would have been selling into, probably this top right here, and then just selling the rest when it got a liquid. Nothing great, but definitely a missed opportunity I should have played. IBIO on this day, on April 1st, was a very good trade by me. It was just a first red day on a multi-day runner after 2 days of extension. Let's see. I shorted it into the initial push. I remember that. Scaled down a little bit right here as it kept pushing because I thought it was just going to roll over and crack low a day. But then we had this crack, immediately scaled back in, and said, screw it, I'm just risking red green at this point. Started to, crack VWAP a little bit. We're holding right there. This is what I thought was the inflection point. We're either going to go higher, going to go lower. I added, but I just couldn't get my full fill. I was trying to add up to like 4,000 or 5,000 shares, and I just really couldn't get my fill. And it just cracked, and I said, shit, I missed it. Probably should have threw an order a little lower, moved my risk down to high a day once it cracked the lows. But still, I think I had maybe nothing great, like 2,800, 3,000 shares. And it cracked hard, cracked once more, and I was covering right here in the 320s. I said, you know what? That's good enough for me on a first red day like this. Usually the morning fades are the best. Just take your gains and move on. So that was that. That was the first. I want to talk about KULR, how this was a big miss for me. So this was let's just zoom into the chart like this. This was a listed first green day chart, one of my classic patterns. It's a big runner, relatively big runner, good volume, multi-day run, holding its gains really well. And I was playing it here on the first for that listed first green day breakout. We never really got the momentum. So I cut it, and then, it's been 1-2 days I've been trying. So I said, maybe it's not going to work. And it's funny because a lot of the time I say that the next day it works, which, the next day it worked when I took it off of my watch list. And it was a perfect risk reward. If I was paying attention, they had some contract news or something. But if we just go into the daily chart, I mean, it just doesn't get much better than this. The previous day we did qualify volume-wise. We were still holding up. I just got emotional. It wasn't working, and I was a baby, and I took it off. Just purely emotional that I took it off because it didn't work when I wanted to. But, shit's not going to work when you want it to 90% of the time. But this was perfect. Perfect green hold with news, risk reward, good volume. Buy 50,000 shares here if you want over high of day, 43, 44, 45, whatever the hell you want. Sell a piece into the 48 break here, round number 50 coming up. Sell another piece over 50 and then hold a piece, see how far we could go. I probably would have been selling at this point after I would have said, oh, that's a hard crack, or at least into this next bounce after this big pull. And, it could have been a really nice trade. Yeah, I would have definitely been selling right here. No way I would have been holding to 75. It's a breakout chart. I probably should have, but knowing me, I would have been out sooner. But that was a big missed opportunity. And the lesson there is, don't let your emotions get in the way of what a good trade is. This still qualified as a listed first green day. Super shallow pullbacks, holding its game really well. No reason why I should have taken it off. It was just me being a baby. That's why I took it off. Then on the second here, I did play Sisu, great list of first green day, just classic multi-day runner, good volume, pullback, 2 red days, and then I was just looking for the bounce. You see, we were holding the previous day lows, we were going green, we were going over VWAP, and I was buying a little feeler out of the open, I think in the 920s, came up, we dipped, and this was just perfect. Good volume churning, more volume coming back in. Break through the high of day, I added at 10. My risk at this point was green-red. Didn't really get the size I wanted to at all. I only got 700 shares, which is pretty pathetic, actually. But, I was patient with them. I held, and just sold right into the gap up. I sold into the gap up for a really solid gain. It's still a great profit, even though it wasn't great size, but it is what it is. And this is, basically best case scenario, I'm thinking, especially in this market environment. So take that every day. And, it did end up fading. Sadly, didn't go enough for me to short it. Would have been a really good short intraday. As we know, the chart developed a bit and squeezed all the way back up towards 18. So you don't want to swing short that on a bounce day like this. But it was definitely a good trade for me. And then the big miss of the day that I'll go over again, I was just a little, I don't know. There just wasn't exactly one of my pure patterns. But when, a hot IPO like Reddit comes around, goes to 75, comes all the way down, huge volume, huge liquidity, huge range, there's probably going to be some sort of bounce. And I was just looking for the trend change. And I think on my watch list, I wrote the trend change would be holding the previous day lows, holding VWAP, going green and breaking over the high of day, something along those lines. And again, I did the same thing I did like I did on KULR. We dipped, but we were holding previous day lows, started holding VWAP here, broke the highs. I think I bought it at 45. I'm pretty sure. It came all the way back down. I said, oh, that's a super weak pull. I'm out. Of course, I cut it, and then it comes right back. Don't know why I wasn't re-adding or rebuying at 46, just risking the dip low here at VWAP. That would have been really good. But I just, for some reason, left it alone, and it ended up running without me. And then to compound and make things worse, I actually did short it. I'm just laughing at myself right now. Shorted it at 50.51 or something, like right here. And then top ticked out at 51. What was the high here? Well, the high was me, 51.30. I top ticked out, which was pretty funny. Bad decision. It was me being undisciplined, chasing profits rather than playing patterns and sticking to process. But that's what happens. It was a good lesson to knock me back down a bit, to start the week, and really got my mindset in the correct headspace. Got me back in the right place. I like losses because it really, usually when I lose, it's when I do something that I'm not supposed to do. When I lose in a scenario like this, of course, I'm going to lose on good patterns when I'm doing what I should be doing. But a lot of the time, I do stupid things like this. I always say, when I do what I'm supposed to do, I win. When I do what I'm not supposed to do, I lose. But I'm just pulling up here my April 3rd trade, which was actually on Cocoa Futures. Let me just try and find some chart here to show you. All right, I guess I'll choose this. Okay. So Cocoa Futures, obviously massive run, supply chain issues, weather issues, blah, blah, blah. I don't care. It's just a chart. I don't care whether it's futures, options, stocks, this, that, whatever. To me, charts are charts. Human emotions are the same, no matter, what instrument it is, what trading vehicle it is, across what market it is. So, let's see, this was on 4/3, April 3rd. So Cocoa, yeah, massive run. I was shorting it this day here, and I just covered for basically break even. I made $300. I was short. There were issues. I couldn't short it at E-Trade because ICE, the connection with ICE went down, all this crap. That was terrible because I was trying to put orders in right around like 99.58 here, and they just wouldn't go through. But, blessing in disguise, because if I said, oh, I'm going to swing it, I would have got stopped out. Broke out over 10,000, came down. I said, maybe that's a fake out breakout type of thing, and the top could be in. So then on the 3rd, I just played it very simple. Where's the 3rd? Right here. Very simple. We opened, we consolidated. I don't have VWAP on this chart, but we crack under VWAP, and I short at 898.51 right here. Of course, it's a bit too early, but I said, it's a good risk reward risking, near the high days here. And then we ended up slamming 830. And I said, screw it. I'm going to take my nearly $3,000 in profits before the actual market opens here around 9:15, 9:20. Use that cushion to help me add size on my day trades if they really set up well. I could take on bigger risk. So I took that profit, but then sadly, of course, my day trades, it's one of those days where they just didn't want to work. And I forget which ones they actually were, but yeah, no day trades worked. I actually ended up losing, I think, an extra $400 trying to push size on a liquid junk, but that happens. It is what it is. And then, yeah, that was the 3rd. So let's go to the 4th. VVPR. So this was a first red day. So the whole thing here, VVPR was a big runner. let's see, 2 to 10, that is a very big run. And shorts really got killed on it. And I was just looking for a classic like that IBIO short I had on the first, same exact thing. Just let it open, let it consolidate, let it crack through the lows, cover into the morning wash, textbook, A plus, simple, repeatable pattern. And that's basically exactly what we got, but we got it even better because here we actually got a small gap up, which is great. And this one, I took a feeler, made a video about it the other day or whatever. Took a feeler here, just 100 shares. It opened and it just couldn't spike. So I shorted. I only got 1,000 shares short, nothing crazy. We had a hard dip, bounced. I said I'm going to be shorting bounces using high of a risk. Doubled down to 2,000 shares. I just didn't think it was worth going any bigger at this point. And then I luckily covered basically the low of day here because I said, you know what, the psychology behind the shorts, they've been getting killed. They're probably going to get greedy and want to hold for more and make back their gains. So I said, I'm happy taking the morning move. And it's, if it does, usually I say if things don't stay heavy till 11, 12 o'clock, they usually start bouncing right here. Good thing I covered because it bounced right up and then 11 we squeezed, started holding VWAP, and I wouldn't have wanted to dealt with that. I mean, I could have reshorted, but it just wasn't my play. I was looking for this easier, not that anything's easy in trading, but easier, predictable move, and that was that. The other trade I took was Mezzo, where it was a big multi-day runner holding its gains, and I was looking for first green day potential breakout, maybe like that KULR chart, something similar. But if we notice here, the volume just never came back, and it didn't really do much. And that's what I've been noticing on my listed first green days. I even highlighted this one. Yeah, we broke the highs, no volume came in, and I just scalped it right out of it. There's no reason to stick around. We're getting the same scenario with IBIO and even XTIA on Friday and ABIO. It's just the listed first green day. It happens, patterns are cyclical just like markets are cyclical. And unless they're A plus, volume liquidity names like a CGC, maybe, the listed first green days aren't going to be as good. CZU was pretty good. That was the last good one, but the volume has been dying out on them, which happens, especially when the overall market's a bit weak. Volume kind of dries up, the momentum buyers dry up, the shorts stay a little more patient. So it happens. It is what it is. But on Friday, really my goal was to take no trade. But the only trade I took was CADL. And it was not short. I actually went long because my whole idea was in my watch list that shorts were twisted. Shorts were, screwed. It was just potential max pain for shorts. This was one of those patterns. And that's exactly what happened. I said I'd rather be shorting it on squeezes than shorting it into the morning chop that all the shorts are going to be shorting into, all those day two gap shorts. Here we are. When I'm looking at the chart, all I'm seeing is, okay, system shorts entering. Okay, maybe taking a piece off. Okay, getting squeezed out. Okay, reshorting. And then right here, systems go to shit. Everyone gets stopped out. After this is when I get interested. So you cut this chart off from here to here, boom. This is my 930 chart. I don't care about the rest. The shorts got squeezed out. That's what I was looking for. And we had a hard pull. At this point, we had a halt down. The shorts are thinking, oh, hammer it. It's time. So I turned into a buyer. I actually got a great average. Here, just for a scalp, it was the only high odds opportunity that I saw. Just understanding the psychology of this name and who's trading it, what's going on here. I knew that, shorts might get a little overzealous, overconfident now, try and make back those gains, revenge trades, and slam in. So I thought there has to be it doesn't have to be, but there could be some sort of short-term bounce. I just thought looking at the daily chart as well, the intraday chart, it's pretty good risk reward if I'm risking like these lows here, T level, which also has to coincide with green red. And I said, if it goes, I'll start small. And if it goes lower, I'll add. Not in a bad way. Like I'll start really small, and if it goes lower, I'll just add. So yeah, we have the crack here. I started in at like 7, literally at the lows, small size, and then we held the next minute, and I was adding. We were going higher, I was adding, and then I just said I'm going to risk the 713 low. This was a very short term time frame, very specific, very meticulous trade. So I'm going to risk this low because if it cracks, I'd rather cut and retry lower. Maybe we go red. But we had a nice bounce. I took, I don't know, 60, 70 cents a share, and boom, $1,000 profit for Friday. Wasn't looking to trade, but this forced me to trade because I've just seen this so many times and I just know what's most likely going to happen, and the risk reward was worth it. But yeah, that was it. That was the main stuff that I wanted to talk about for the week. Finished Friday with a nice gain. Monday was a solid gain. Tuesday was nice. Wednesday was nice. But notice how I said just the notes over here. Said not happy with how the day ended. Playing a short on a long pattern Reddit. Can't do that when I break rules. I'll lose, follow my patterns. Next day I said calm down on illiquid setups. Find the best plays. Multi-day runners that sustain volume and liquidity. So what this really says to me right here is you're overtrading, do less. Even though they were great profit days, I would rather not have the stress at all. I would rather do nothing on these days and not have the stress and push it on days like Thursday here where it was just an A+ play, the BVPR short, which just worked rather perfectly, or just play little scalps like CADL when I just see that little market inefficiency, something I've seen hundreds and hundreds of times before, and just go for it. Like I said here, nice reactive trade, finding the one quick little inefficiency in the market. But yeah, that's that. Very solid week, most consistent week I've had in a long time. And I think that's just due to my mindset recently, staying away from chat rooms, staying away from social media, staying away from other people's opinions, and just really looking at the charts and they tell me what to do. And going forward, I feel like the overall market's a little shaky right now. Small cap markets actually looking pretty good. We have a lot of runners, so I'm going to be really focused short term, day trading, really nailing my patterns and sizing if the charts allow me to, sizing on longs, bounce longs at volume, and liquidity starts churning and really building on the charts and levels are really holding, and sizing into shorts once the backside confirms after I know all the system shorts and early shorts got squeezed out and are really emotional and really twisted and all over the place. That's when I'll go for it. Backside, size in, keep scaling as you could move your risk down, down, down if the chart allows you to. Just better odds for me personally, less emotions I have to deal with, more straightforward, and just better risk reward in general once the trend sets. Don't fight it, just follow the trend.